Hello, friends, and welcome to the end of week wrap up. It is Thursday right now. So, tomorrow technically is the really big news for job reports. I'll tell you why in a second. But in advance of the Labor Day weekend, I got to admit, I'll be sneaking out a little early tomorrow to plan for that long weekend. So, we're doing the video today on Thursday, even though we got big news coming tomorrow. And let me show you why this is, in fact, big news. So, guys, I am pleased to report finally, finally, the rates are starting to come back down. So this is from Mortgage News or Mortgage Daily News website. This is just, basically showing you the rates have moved down to now the very low sevens to where it's almost 7%. And that's down from like the 7.3, 7 point whatever. Here's the graph that proves it. So look, guys, last week and a half-ish, let's call it that. We've seen a lot of green over there on the right side. Okay, the reason why tomorrow is so big, you see this black line, this like squiggly black line, that's the 50-day moving average. And that can be formidable. In fact, look at the two other times. Heck, look at the entire graph along the way. You can see we hit it and come down, or don't at least break it. And then we hit it again and maybe made it over there mid-July, then lost it and came back down. And then we kind of tested it for half a second. So it's a big deal if we can break that. And tomorrow, if we get a bad jobs report, meaning like not a lot of jobs, people losing jobs, while that stinks for those individuals, and it stinks for the economy, it is good for mortgage rates. Why? Because the Fed is trying to fight inflation. And in doing that, it will hopefully have that come down. So I saw an article and I like this, and I added some of my own spin on here. I've been telling people rates should be right now in the low sixes. Here's why. And look at this chart over on the left, this little table from the 1970s, 80s, 90s, all the way to today. You can see the average spread between the 10-year year, the 10-year treasury yield and mortgages is typically the 30-year mortgage rate, typically on average is somewhere around, call it 2 points, give or take. I haven't actually done the full math to see what all that averages out to, but you can see it's usually under 2 points with the exception of a 2.1, 2.2. So let's just call it 2% from round numbers or lower. Well, today, the difference between that and down in the bottom, little graphic here, the where it says like the big -1, the red one on the right side, on the upper part, it says 4.1. At the time of the screenshot, the 10-year treasury is at 4.1, which if history were to tell you anything, it indicates that rates should be around 6.1. As I just showed you, we're at 7.1. So as inflation comes down, then rates hopefully can start behaving a little more normal and the Fed can relax. But on the right side, you can just see the graph of the spread, how far, especially during early 2022, man, they were significantly higher than where they were. But if inflation goes from 9% where it was in earlier this year or early last year, we've now at 3%. If we can keep that movement going down, things can become more quote unquote normal, because the Fed, and this is boring, you don't have to read this, but basically the last week, the Fed basically said jobs, labor market remaining quote unquote tight. So if we can see things, people lose their jobs, that's going to be good for us. So here's some stats. If you're in the industry, home builders, realtors, feel free to pause, read through this. I'm not going to for right now, but the whole point to say is that, sales are down 16% year over year for existing homes. What that means is there's so much already a tight inventory that when you take down 16% of what was being sold, it's just really tight. And when you do that, medium home prices typically go up. You guys can see down there as far as the investors, there's a few more out there, which is surprising to me. I thought that would actually be going down, but again, good stats for the home builders out there. Feel free to take a picture of this. Basically, just again showing the pace of sales. The big part that kind of is concerning, if you will, as far as where'd it go? When I took the screenshot, let's see. The total inventory is down. Technically the second right on the right, it's down 4.8 year over year. Why is that? Because last year when rates went bananas, and around July, August, when they finally hit those peaks of 7%, the builders I know basically stopped building. They stopped doing specs. They tried to just get homes, sold that they already had. And that was last year's crunch. So if you're in the business, last August, September, October, November, those are pretty like small months as far as like transactions, because rates just, the shock of the rates and builders stopped building. So that's a big reason why the year over year is down, which by the way, just adds and compounds the fact that we have low inventory. So I don't see this getting fixed anytime soon. Builders, if you haven't already, saw this, and I'm sure you guys know this, but bathtubs and living rooms, basically they're trying to consolidate and make smaller square footage to keep homes affordable. So a big thing, and I'll talk about here from affordability standpoint, we all know things are expensive, right? Rates are expensive, rates are high, homes are expensive. But guys, I don't think we understand that we are literally like at an all-time high for home ownership rate in America. And as much as pains me to say this, but not everybody should own a home. 100% of the population is not going to be homeowners. And right now, and look at the highlighted part down below, it just kind of talks about 20 years ago compared to today. Basically, we are at an all-time high for homeownership. So yes, I understand they're quote unquote unaffordable, but we're basically where everybody who's going to buy a home percentage wise, it's usually in the low 60s, 60% of Americans, 61, 64. I've seen that over and over and over. It's still somewhere now, I think, in the mid 60s. So again, homes are unaffordable, but guess what? If 2/3 of the population, if 2 out of 3 Americans own a home and houses became expensive, I think we're not focusing on the fact that that's a good thing. That means 2 out of 3 Americans are making more and more money and wealth from an equity standpoint. So look, it stinks. I'd rather pay for less than pay for more. But the reality is, if it means what I already own is going up, that is awesome. So I just wanted to point that out. Those are some good stats. You guys can read it. Basically, 83 million homeowners back 20 years ago, and now we got 96 million. And, for the number of homes to be sold, we have less now. Back then, 20 years ago, 6.5 million homes for sale or sell per year. Now it's only about 4 million. So it's a real thing. Supply and demand, economics, been saying it a long time ago. Okay, guys, I read this article. This was the title, but I just want to advocate this as well. I've read the first 3. All great books. Highly recommend. Number 2 for the entrepreneurs. If you actually are a business, it is a fantastic book. I remember reading it back in my 20s. I read it 2 or 3 times. It changed my world. Rich Dad, number 1 and number 3. Those are great things. If somebody is thinking about real estate, it's a great way to have the mind shift to get in there. I once owned 16 rental properties. We sold them all at the peak of COVID. Makes me look really smart. But number 4, I've not read the actual book, but I have seen it's about an hour 15, hour plus lecture that this guy gave. He found out he was dying. He gave a speech. It is awesome. It is great. You guys should take a Saturday or Sunday and just put it on the headphones while you do yard work or something. But it is fabulous. I'm sure the book's great too. But highly recommend these books. If you guys got young college students or somebody graduating coming out in the world, I think these are fantastic, fantastic books that just help kids, young adults, start getting the good mindset for becoming good members of society. Let's get social, team. You know the drill. All right, share, subscribe, all that fun stuff. As always, we appreciate you guys. Hope you have a wonderful, amazing Labor Day weekend. And let's be grateful that we are living in today's world and not 100 and some odd years ago when Labor Day had to be invented just to give us a break. So enjoy the Monday that you guys have off, and let's root for a jobs report that will hopefully help rates tomorrow.